Well, it is Fed Day, so today at 1 o'clock, please join me. We're going to be a live event watching what the Federal Reserve does. We're going to watch it live so you can see what's happening with mortgage rates and also the stock market during that time. So my name is Dan Frio. My goal here is to educate and inform you guys everything real estate, especially when it comes to the financing options. So today we're going to talk about what actually caused inflation to get where it is and what is the Fed doing about it. So let's dig into this context. Why all of a sudden in 2021 there was no inflation, and then all of a sudden in 2022 inflation just blew out the roofs, and now the Federal Reserve and everybody is scrambling to try to put all the puzzles back together because they broke this whole system. So that's what our topic's going to be today. But the headlines that we have today so far is ADP payroll numbers came in, and they came in at 239,000 in October, better than expected, and wages also increased. Look at wage increase, 7.7%. So you guys might not realize that you're making more money, but most people in general are making about 7.7% more than they did last year. Okay, so that's one of the pieces of the puzzle that's causing a lot of this inflation numbers. So what I want to do today is explain what happened and then what the Federal Reserve's doing and why they're doing what they're doing to cure this thing. So we have to go back in history and go back to where we were, I'll say right around the pandemic. And why that's our focal point is because that's when the federal government came in and said, we're going to send everybody a ton of money just to help them out. Okay, well, that's not always the good thing. You always just throwing money at something isn't the cure for everything. I hope this government can finally realize that. But I'm going to post this article down below. You're going to be amazed on how much money was actually spent and where it was spent to actually help kind of curb the economy during the pandemic. So you can go down through here, and there was, I think, there's 1 point something trillion dollars in stimulus that went out. Trillions. You know, remember the word billion used to be a big word, and now they throw trillions around like it was nothing. So one is the government actually stimulated the economy way too much, and I'm going to prove that to you here in a minute. The next thing is the Fed basically had rates at zero for a long time. So here's what the Federal Reserve's done so far. So at the beginning of 2022, rates were basically, we'll say zero. They're 0.08, okay? Where are they now? 3%. So they went from 0 to 3% basically in 9 months, okay? That's a pretty quick and steep move. All right, but the next piece of this puzzle we want to talk about is, I'm going to bring back the old verbiage that I used to use, is forbearance and student loan deferrals. Okay, so here's what happened. Back in 2020, the government came out and said, if you have a house and you're affected by COVID, call your mortgage company. You don't have to make a mortgage payment. Then they also said, if you're renting from somebody, we're going to give you some relief there so you don't have to make a rent payment. And if you have student loan payments, stop making those as well. So think about it. You have the government sending out checks to everybody, stimulating the economy. Then you have the government coming back saying you don't have to make a housing payment if it could be mortgages or rent, and you don't have to make a student loan payment. So in my case, if I didn't have either of those, I'd have no bills. All right. So what happens? Well, this is what happens. Let me get my head out of the equation for a second. This is the net disposable income for the United States throughout basically since the 60s. Look through here, okay? You can see a nice trajectory up, and then all of a sudden, like I always say, what in here just doesn't fit? Well, that doesn't fit. How did we have net disposable income during the pandemic, during when everything was shut down? How did it spike to the highest levels we have ever seen in history? Well, we go back to this old adage. We have the stimulus, we have zero rates, and we have forbearance on any major payments that you have. Thus, what happens? Inflation. So here's how inflation works. You have, and then let me put this in there as well. You have a supply chain issue. So you have goods that are way down here. You can't supply enough. You have the U.S. consumer that has excess money. So what happens? Prices are going to rise to an equilibrium, okay? The supply-demand chart we always talk about. Where's that equilibrium? Well, if you have too much demand and little supply, well, the prices are going to go up to the point of equilibrium. I just said the prices are going up. That's inflation. Okay, that's what's caused all this mess. So the Federal Reserve now is trying to get the money supply out of the system by raising rates and doing a bunch of other things. Okay, so that's what's happening right now. That's what the Federal Reserve's doing. And the Federal Reserve is also compounding this mess by saying they used to buy $40 billion of mortgage-backed securities a month. Buy them, okay? So they were taking that. So they were pushing that. What they were doing is they were artificially increasing the prices of bonds, the mortgage-backed security bond. I'm going to explain that in a minute, thus driving down mortgage rates artificially low for a long time. Okay, so that's what happened. So now what they did is they stopped buying that $40 billion a month, and they're now selling the mortgage-backed securities they're holding on their balance sheets in the market. Now we have a liquidity issue. Now there's too much supply with little demand. It's a mess. So that's what the Federal Reserve is trying to fix. All right. So what I'm going to also try to do each week, and I know this is a little off topic, but I'm going to try to post a video each week of just a video that I think I want to share with you guys, because I think it's that important that you guys realize and educate yourself on this stuff. So I want to share this video with you down below. I won't talk much about it. I'll put it down in the description below. Check it out. Leave in the comments. Let me know what you think of that video, and should I continue to do that. But the economic news we have right now, let's focus in on what the Federal Reserve is going to look at. They're going to look at the employment numbers, all right, wage growth, and some other things. Let's go what those other things are. Well, the first thing we have is the JOLT report. The JOLT report came out yesterday, and you might have heard some news about this. They're saying, whoa, the JOLT numbers are really, really high. They're looking really good. Well, the concern here is, if you follow this, last month, the previous reading, it came in at 10.28 million people. What the JOLT report is how many job openings there is, okay? So the last reading came in at 10.28 million. The previous reading was 11.2 million. So all of a sudden, I even questioned, I'm like, where did 1 million jobs go? Well, I don't know if it was an anomaly or what, but now they're coming back, and now we're back to 10.7 million job openings. Okay, so now you're going to hear rumblings about this. Whoa, the JOLT indexes are way up. Well, no, if you just take out the last number, it's basically flat. So that's one of those numbers. So be careful on which who you watch and who you listen to about the JOLT report. Another number, like I just said, that came in is the ADP number. It basically blew out the numbers, but I'm gonna put that aside right now, because I don't trust the ADP numbers, because this is the first time they did this, and I really don't like it. All right, so then you can see here the FOMC is coming out later this afternoon. We're gonna have a live event at that time. You're gonna see it's 2 o'clock, 1400 means 2 o'clock. Well, that's Eastern time. I'm in Chicago, so I'm in Central time. So I'm gonna do a live event at 1 o'clock, and then I'm also gonna do another live event at 4 o'clock to analyze and help you guys find the best mortgage out there, and I'm gonna show you that in a second. But without further ado, let's go and figure out where mortgage rates are. So here's what's going on with mortgage rates. What you're seeing on your screen, you're probably saying, Dan, those aren't mortgage rates. I know, but this is actually the mortgage bond that trades on Wall Street that gives us an idea where mortgage rates are going. So it's basically flat. It's up 0.03. It's up 3 ticks. It's up nothing. What's happening right now is the markets are just holding steady, waiting for the Federal Reserve to come out and tell us what they're going to do. Then all of a sudden, you're going to see this move way up or way down, and that's what we're going to do live. But where did mortgage rates end yesterday? Well, it's right here. I thought we were going to hit the 6.99% rate yesterday, but we didn't. So what you're seeing on your screen here is the top 6 products issued by or posted by Mortgage News Daily on a daily basis. They do this. This is the top 6 mortgage products people use when they're getting a mortgage. Rates are coming down a little bit. Look at the 52-week high right here. It was 7.37%. We're at 7.9 right now. So we're about a quarter off its high. So a nice trajectory there. So I'll have this report down there. If you want to check this out, I'll have the link to Mortgage News Daily down below. They post this as the national averages. How do you find out what mortgage rate do you qualify for? So you call your mortgage company, you get pre-approved, or do you do whatever? So what do you do with that? You just wait and wait and wait? No, I'm going to help you shop around for a mortgage. Okay, here's what I got for you. Today at 4 o'clock, we're going to do a live event. We're going to go over loan estimates. I'm going to show you behind the scenes what we actually do. So I'm a bank, but I'm also a mortgage broker, meaning I'm set up with 84 of the largest companies in the country when it comes to mortgages and banks. Okay, so if you're looking for a mortgage, I'm like what's the places you go and you put in your quote and then they scan all over the place and then they have all these banks calling you? Well, I'm not going to do that. I'm actually going to scan this system for you, and I'll be the one calling you back. We are set up with 84 of the country's largest banks and mortgage companies, and I'm going to walk you through how we scan your mortgage, your criteria, with 84 of the country's largest companies. So what you do is first thing is call your mortgage company if you've been pre-approved. If you haven't, you're safe. We're going to search this for you. But if you've already had a mortgage quote, I want you to call that mortgage company and say, I want your best foot forward. I'm going to give you this one time. Give me the best you got. I'm going to get one other quote, and then if yours is the best, I'll be back to you. Okay? So what I need you to do is get that loan estimate. Go to my website, therateupdate.com. You're going to click right here. What you're going to do is fill out this information. The biggest part of this is I need to know how you want me to contact you back. That's right here. But you're going to drag and drop that loan estimate right in here. I'm going to scan this and show you. I'm going to do a live event today at 4 o'clock Central Standard Time and show you how this works. So we're going to take 3 loan estimates that we've got in the last couple days, and I'm going to show you those. Don't worry if you send in your loan estimate. Everything is blurred out. I'm just showing numbers so I can show you guys how much money we're saving people that are calling us. So to find out more about me and my team, all I need you to do is go to therateupdate.com. Here it is. Here's the loan estimate tab right here. You can give us a call right over here. It's 844-775-5626. Or what a lot of people are doing, they're actually booking a meeting. We'll do a one-on-one consultation with you because your situation is unique and you need answers based on your unique information. So that is a report today. So don't forget, guys, we'll be live today at 1 o'clock watching the Fed. Then we'll be back at 4 o'clock Central Standard Time to show you guys how we do a loan estimate review to scan your loan criteria with over 84 of the country's largest banks and mortgage companies. So stay tuned. I look forward to seeing you today at 1 o'clock. God bless, guys. I'll see you then.